A new world of ship leasing and sale and leaseback transaction. Traditionally, the most common way of financing ship has been through debt and equity financing. However, over the past decade, ship leasing has become a very significant competitor and alternative for the provision of finance for the acquisition of ships. Recent market studies are expecting the global ship lease market to grow at a significant pace over the next 5 years, and that is already taking into account the expansion of Chinese leasing companies into the market over more recent years, as well as the potential impact of COVID-19. Recognizing this growth and appetite for ship leasing transactions, the world's largest international shipping association, BIMCO, set its sights on developing the industry's first ship sale and leaseback standardized term sheet. The sale and leaseback term sheet ship lease was released last month and will be rolled out to support ship owners, leasing companies, financial brokers, and lawyers when negotiating and drawing up sale and leaseback agreement. But what is ship leasing and why is it such a strong trend in shipping? We explore this growing market and look at what is in store for market players in this new and challenging time. What is ship leasing? In the context of shipping, a lessor as legal owner or leasing company will give to a lessee, the operator or shipping company, in consideration of regular lease or hire payment, full possession and operational control of the ship for an agreed period. There are different types of ship leasing transaction, with the most common type of leasing structures being the operating lease and the finance lease. These structures and terms are also significant from an accounting treatment perspective. Operating leases are typically used for short to mid-term charter of the ship, and at the end of such term, the ship is returned to the lessor. The lease can usually be terminated at the lessee discretion, and it will be subject to the applicable accounting treatment, generally not appear on its balance sheet. On the contrary, finance leases are more commonly used for long-term finance of ships. Here, the lessor acts as the financier and has little involvement with the ship other than owning it. The principle is based on the premise that the lessee should enjoy the benefit and be subject to the risk of ownership of a vessel, because during the term of the lease it will have possession and operational control of the ship. Finance leases will contain a hell or high water clause, meaning the lessee cannot in any circumstances terminate the lease or be excused from paying hire. If the lease is terminated early, the lessee must compensate the lessor. What has made ship leasing so fashionable? Ship lease structures over shipping companies an alternative source of capital, which is helpful in time of economic difficulty and when traditional debt finance from banks and financial institutions is limited. As banks become more regulated and risk-averse, ship owners are seeking alternative structure that give them cash liquidity, flexibility, and returns. A sale and leaseback transaction illustrate the key benefit of ship leasing for both a lessor and lessee by factoring in the fiscal and operational needs of both. This structure allows the owner of the ship to sell and lease it back as lessee without incurring a huge debt on its financial statement. The buyer as lessor can in some circumstances benefit from the ability to depreciate the value of the ship against its tax liabilities and subsequently share part of this benefit with the lessee through discounted hire payment. There are other benefits such as freeing up working capital of a shipping company to enable investment in other areas, whilst also managing the financials of its business through agreeing longer-term repayment structure, but also more equal higher payment to follow income stream. Another point worth mentioning is the fact that the lessor will always be the owner of the ship, and so in the event of non-payment of hire or any other breach of contract, the lessor will be able to terminate the bareboat charter and take back possession of its ship, albeit this is not always entirely straightforward. China's leasing companies. The reason for the expansion of the global ship leasing market are varied, but what is clear is that the market has experienced exponential growth in the last 5 years. Much has been led by China's leasing transactions, which today are a prime source of finance, accounting for over 10% of global ship finance. Their interest has since shifted out of the new build market, and leasing companies have been robustly entering the second-hand market. Even with today's uncertain outlook in shipping amid the global pandemic, China's leasing houses continue to conclude new deals this year. There were new reports of CSSC Shipping, the financial leasing unit of China State Shipbuilding Corporation, CSSC, announcing plan to issue two bonds worth a total of 800 million US dollar due in 2025 and 2030, and to use the net proceeds primarily to develop its leasing business and refinance its existing indebtedness. Buckham Leasing also made the headline with a 650 million US dollar contract signed with a Shell for a dozen dual-fuel long-range tanker, while still exercising some caution in this time. Their lending remained robust, having expanded by 25% from 2018 to 15.8 billion US dollar in 2019. Japanese and South Korean financial institutions are also active players in this business area. In June 2020, the Hong Kong government published an attractive ship leasing tax incentive in order to compete with tax-friendly schemes in Singapore and other jurisdictions by offering profit tax concessions for qualifying ship lessor and ship leasing managers. The incentive applies to Hong Kong-based managers using separate Hong Kong incorporated special purpose companies to own and lease ships for use outside Hong Kong waters based on operating or finance leases entered into with either affiliated or third-party leases. The ship leasing company must have an adequate number of full-time employees in Hong Kong. In any event, not less than two, and an adequate annual operating expenditure in Hong Kong. In any event, not less than approx 1 million US dollar. Whereas the figures for a ship leasing management company are respectively 1 and 128,000 US dollars. The conditions are said to be in general less onerous than those of Singapore and has been designed to help promote Hong Kong as the preferred jurisdiction for ship leasing activities.